Investing in the stock market can be a rewarding endeavor, offering the potential for significant financial growth and long-term wealth accumulation. However, it is not without its risks, and successful investing requires a well-informed and strategic approach. Before diving into the market, it's crucial to understand that thorough research and careful analysis are key to making informed and profitable investment decisions. In this video, we are going to cover understanding the basics of stock market research, identifying your investment goals and risk tolerance, conducting industry and sector analysis, evaluating company financials, analyzing competitive position and management, using stock screeners and research tools, monitoring market trends and news, and diversifying your portfolio. So keep watching to the end, and we will guide you through the essential steps of conducting effective market research. Before diving into specific stocks, it's crucial to understand the two primary methods of stock analysis: fundamental analysis and technical analysis. Fundamental analysis. This method involves evaluating a company's financial health and performance. Key metrics include the price-to-earnings (PE) ratio, earnings per share (EPS), and revenue growth. Fundamental analysis helps identify stocks that are undervalued and have strong long-term growth potential. Price-to-earnings (PE) ratio. This ratio compares a company's current share price to its per-share earnings. A lower PE ratio might indicate that the stock is undervalued, while a higher PE ratio could suggest that the stock is overvalued. Earnings per share (EPS). EPS is calculated by dividing the company's net profit by the number of outstanding shares. It indicates how much money a company makes for each share of its stock. Revenue growth. This metric shows the increase in a company's sales over a specific period. Consistent revenue growth is a positive indicator of a company's ability to expand its business. Technical analysis. This approach focuses on historical price movements and trading volumes to predict future stock behavior. It involves analyzing charts and patterns to identify trends and potential entry and exit points. Charts and patterns. Technical analysts use various charts, such as line charts, a type of graph used to display information that changes over time. It is created by plotting data points on a grid and connecting them with straight lines. Bar charts, a graphical representation of data using rectangular bars or columns. Each bar's length or height represents the value of the data point it corresponds to. Candlestick charts, a type of financial chart used to represent the price movements of a security, like stocks, commodities, or currencies, over a specific period of time. Each candlestick on the chart provides a visual summary of the price action during that time, showing the opening, closing, high, and low prices to visualize stock price movements. Patterns like head and shoulders, double tops, and triangles can indicate potential future price movements. Trading volume, the number of shares traded during a specific period. High trading volume can indicate strong investor interest and potential price movement. Determine your investment objectives, whether they are short-term gains, long-term growth, or income generation. Assess your risk tolerance to understand how much volatility you can handle. This will help you choose stocks that align with your financial goals and risk appetite. Short-term gains. If you're looking for quick profits, you might focus on stocks with high volatility and potential for rapid price movements. Long-term growth. For long-term investments, look for companies with strong fundamentals and growth potential. These stocks might not provide immediate returns but can offer substantial gains over time. Income generation. If your goal is to generate income, consider dividend-paying stocks. These companies distribute a portion of their profits to shareholders regularly. Analyze the industry and sector in which a company operates. Look for sectors with strong growth potential and favorable market conditions. Consider factors such as market trends, regulatory environment, and competitive landscape. This will help you identify industries that are likely to outperform the market. Market trends. Identify current trends that could impact the industry. For example, the rise of renewable energy could benefit companies in the clean energy sector. Regulatory environment. Understand the regulations that govern the industry. Changes in regulations can significantly impact a company's operations and profitability. Competitive landscape. Analyze the competition within the industry. Companies with a strong competitive position are more likely to succeed. Examine a company's financial statements, including the balance sheet, income statement, and cash flow statement. Key financial metrics to consider include revenue growth, indicates the company's ability to increase sales over time. Consistent revenue growth is a positive sign of a company's potential for expansion. Profit margins reflects the company's efficiency in converting revenue into profit. Higher profit margins indicate better cost management and pricing power. Gross profit margin, the percentage of revenue remaining after deducting the cost of goods sold. It measures the efficiency of production processes. Operating profit margin, the percentage of revenue remaining after deducting operating expenses. It indicates the company's operational efficiency. Net profit margin, the percentage of revenue remaining after all expenses, including taxes and interest, have been deducted. It shows the overall profitability of the company. Debt levels. High debt can be a red flag indicating potential financial instability. Compare the company's debt levels to its equity and earnings to assess its ability to manage debt. Debt to equity ratio. This ratio compares a company's total debt to its shareholders' equity. A lower ratio indicates a more financially stable company. Interest coverage ratio. This ratio measures a company's ability to pay interest on its debt. A higher ratio indicates better financial health. Return on equity measures the company's profitability relative to shareholders' equity. A higher ROE indicates efficient use of equity to generate profits. Assess the company's competitive advantages, such as unique products, strong brand, or proprietary technology. Evaluate the management team's track record and their ability to execute the company's strategy. Strong leadership is crucial for long-term success. Competitive advantages. Identify what sets the company apart from its competitors. This could be a unique product, a strong brand, or proprietary technology. Management team. Research the backgrounds and track records of the company's executives. Look for leaders with a history of successful business management and strategic vision. Leverage online stock screeners and research tools to filter stocks based on specific criteria, such as sector, market capitalization, and financial metrics. These tools can help you quickly identify potential investment opportunities. Stock screeners. Use stock screeners to filter stocks based on criteria like price-to-earnings ratio, market capitalization, and dividend yield. This can help you narrow down your options to stocks that meet your investment criteria. Research tools. Utilize research tools provided by financial websites and brokerage platforms. These tools offer in-depth analysis, news, and reports on individual stocks. Stay updated with the latest market trends, economic indicators, and news that could impact your investments. Follow financial news outlets, subscribe to market analysis newsletters, and participate in investment forums to stay informed. Economic indicators. Keep an eye on indicators like GDP growth, unemployment rates, and inflation. These can provide insights into the overall economic environment. Financial news. Follow reputable financial news sources to stay updated on market developments, company news, and economic events. Investment forums. Participate in online forums and communities where investors share insights and discuss market trends. This can provide valuable perspectives and ideas. Diversifying your portfolio is key to managing risk. Spread your investments across different sectors, industries, and asset classes. This approach helps reduce the impact of any single investment's poor performance on your overall portfolio. Sector diversification means investing in stocks from various sectors, such as technology, healthcare, and consumer goods. This strategy reduces the risk associated with sector-specific downturns. Geographic diversification. Consider investing in international stocks to diversify your portfolio geographically. This can provide exposure to different economic conditions and growth opportunities. Asset class diversification. Diversify across different asset classes, such as stocks, bonds, and real estate. This helps balance risk and return in your portfolio. Conducting thorough market research is essential for selecting the best stocks to invest in. By understanding the basics of stock analysis, identifying your investment goals, evaluating company financials, and staying informed about market trends, you can make well-informed investment decisions that align with your financial objectives. Thus, in this video, we finally learned about understanding the basics of stock market research, identifying your investment goals and risk tolerance, conduct industry and sector analysis, evaluate company financials, analyze competitive position and management, usage stock screeners and research tools, monitoring market trends and news, and diversifying your portfolio. Happy investing. Thank you. Market Research Universe, MRU, can significantly aid in selecting the best stocks to invest in by providing comprehensive market research and data analysis. MRU offers detailed reports on industry trends, competitive landscapes, and economic indicators, which are crucial for making informed investment decisions. Our expert insights and advanced analytical tools help investors identify high-potential stocks, understand market dynamics, and assess the financial health of companies. By leveraging MRU's resources, investors can make data-driven decisions, minimize risks, and maximize returns on their investments.